IBM, the shares falling after the company reported better than estimated fourth quarter results coming in after the close. $3.59 earnings per share. The consensus estimates among analysts surveyed by Bloomberg, $3.47 a share. Sales more than $27 billion. In the year-ago period, IBM generated a profit of $3.28. IBM saying that it sees 2010 earnings per share near $11. That's about 10 cents above analyst estimates. Joining us on the telephone from San Francisco, where he has been listening to the IBM conference call, is Brian Marshall, an expert in the world of technology at Broadpoint AmTech. Brian, welcome.
Thanks, Pimm. Pleasure.
All right. So, Brian, explain a little bit about the IBM results, a beat on the bottom line.
Yeah, IBM actually put up kind of an IBM-like quarter, if you will. These guys always do a tremendous job in terms of financial engineering, taking down costs and maximizing their earnings generation, whether revenues are going up or revenues are going down. For example, this past year, revenues declined about 7 or 8%, but they grew earnings over 10%. And so that's kind of the IBM way, really optimizing their financial model, and they definitely did it this quarter as well.
All right. Now, any change on your view in terms of the shares? Because you're saying that there are better risk-reward profiles in other tech names. Why are you a little bit lukewarm on the shares of IBM?
Sure. I think IBM, in terms of management and their stewardship of the company, it's just second to none. They've done a great job. In my three-legged stool analogy of enterprise infrastructure, we kind of detail IBM, HP, and Cisco, sort of the big three, if you will, in terms of servicing data centers. And while IBM is probably the best position, in my opinion, with the most software and IT services, they actually have, I view that the shares are fully valued because if you look at their long-term revenue growth rate, it's probably less than 5%, so not a tremendous amount of top-line growth there, and that should be at a discount to the market multiple. So if the S&P is trading at roughly 15 times earnings, I'm going to pay a slight discount to that, call it 12 times my $11 estimate, roughly speaking, and so that's about a $130 target price, and that's pretty much where the shares are today. So we view that the shares are fully valued here in IBM, and we have better risk-reward profiles, i.e., better revenue growth opportunities, more operating leverage, and that leading to higher earnings growth in companies like EMC, Brocade, and others.
Well, when you talk about IBM and you look at the price-to-earnings multiple, as you said, around a 13, the stock hitting a new 52-week high today. What about IBM's position outside the United States, right? I mean, about something like 60% of the sales come from markets that are outside the U.S. So wouldn't that be good for people who are, let's say, betting on emerging markets?
Yeah, definitely. They call it BRIC opportunities, obviously, Brazil, Russia, India, and China. That was up sequentially about 7%, so it's definitely growing much faster. That growth area or those growth regions represent almost 20% of the company's total revenue. And China, in fact, grew about 10% year over year. So if you are looking for some of that international exposure, clearly you can get some of that with IBM. Having said that, they have about $100 billion annually in terms of revenue. And so that's going to take some pretty big infrastructure projects out there with regards to a smarter, greener planet in terms of moving the needle. And so we think that everything needs to kind of fall into position for us to see some really material growth on the top line.
All right, Brian, take a look in the future a little bit. Take a look to next Monday. That's the 25th of January. We've got to everyone mark their calendar because, of course, that is when Apple releases its results. Apple shares up $8.27, closing at $214.20 today. What's your view on Apple, Brian?
Sure. We'll see a lot of growth. I think Apple is the best technology company on the planet in terms of where they're positioned today. They have less than 5% market share of the global handset space, smartphone handset space, as well as the PC space. We have street-high estimates. We're about $650 million higher than the street at $12.5 billion and $2.27 on the bottom line. So we're very optimistic on the shares here. We think that they're going to have a great quarter, in true fashion of Apple in the December timeframe, and we expect earnings estimates across the board to be moving up, and we think that the Apple shares will approach our $260 price target over the coming months.
$260. Any concern about the iPhone sales in China?
Well, China obviously is a big opportunity for them, but the per capita rate's pretty low, so the people that can afford it actually are fairly fairly small. Having said that, we think that they shipped well over 300,000 units into the China market in the first quarter, and that was the last quarter. So, while the opportunity is probably 70 million postpaid subscribers at China Unicom, we're just scratching the surface, but it is helping the growth rate. So, from an iPhone perspective, we're at 11.3 million units for the quarter. That's well above the street at about 8.8 million units. And we think China will actually grow pretty nicely this year.
All right. Well, Brian, thank you very much. Brian Marshall, technology expert, coming to us from Broadpoint AmTech.